Yo, what's up, guys? How's it going? It's your man, the myth, the legend, Jimmy L. Just kidding, guys. I'm just a humble trader in front of my desk, analyzing the markets for you guys, and I do it happily every week, twice. You guys are great support, and I'm loving those Twitter comments. Before you do anything, please give me a follow on Twitter. Where's my Safari? Jeez. Let's have a look at that. Let's get that Twitter on screen. Yep. We're hitting 14k followers. 14.2k followers. Bloody hell. That's bloody amazing. Okay. So we've essentially gone up 10k followers since we've done Hobby Live interviews. And I think this is our 6th episode. Very successful series so far. We started this journey when markets were high, right? When markets were 48,000, sorry. See, I posted today, those who are bullish at 45,000 plus are now bearish below 20k. Sometimes this game is too easy. This is all about counter trading, my friends. It's all about counter trading the market. When most people, you need to follow a lot of people, follow a wide range of people. When people are bearish at the bottom, it's usually time to load up on those spot positions. And if people are bullish at the top, it's time to offload those positions on these people. So, yeah, you kind of have to dump on your followers sometimes. Okay, let's have a look at the markets then. It's been a very slow week. As mentioned in the title of this presentation, slow week. What's the exact title? Jimmy Live, slow week. What to do in ranging markets? What to do in sideways markets? Essentially the same thing. Ranging markets, sideways markets. They basically mean the markets are trendless. What's a trendless market? Trendless market is the opposite of a trending market. So a trendless market is for example, from January 2022 all the way to when was that? April. So that was a three and a half month ranging market. You see there's a range. There's definitely a trading range, right? Which means the market is ranging. Sorry, I have a blocked nose due to my cold a few days. Not COVID, just the regular cold. So the markets are ranging, and there's a lot of choppy price action. By choppy price action, I mean dropping down, going back up, basically 100% reversals of the previous swing. So it is chopping up and down, and for those people who know how to trade choppy markets, it's a very, very profitable market to trade. But for most newbies, for most noobs, crypto noobs, it is definitely one of the worst markets to trade because people don't have the patience, right? People believe that if there's a bounce, it will continue. But instead of continuing, when a lot of people think it will continue, they buy in, causing there to be an offloading of supply, which then causes an exhaustion of buy pressure, buying power, right? So the markets revert to going down. And once the markets go down, those people who bought high start offloading their positions, causing there to be more liquidity to be tapped into. So the whales will buy it up. They'll buy up the coins, causing there to be no more supply to dump, and then the prices revert again. So that's basically how ranging markets work. Ranging markets, if you don't know, usually happen after trending markets. It's kind of obvious, right? Because if you're calling it a ranging market, obviously it's different from the market that succeeded it, or the market that alluded to it. So it's definitely it's a bit BS, but yeah, you know what I mean. Like, once markets are trending, once the trend ends, obviously it starts ranging, or it just reverses, right? Reverses, that's still a trending market. So yeah, it's pretty obvious. So I'll just explain what a ranging market is. I'll just recap. It's basically where you can clearly identify a trading range. For example, when we started our Huobi Live episodes, the market was at 48k. That was actually the start of the next trend, right? It was from 48k all the way down to, what was it, 25k. Yes. So before that, when we didn't have any episodes, this was when this initial dump didn't really have any reason, I presume. And then the second dump was Russia invading Ukraine. The third dump, I don't think there was any news attached to that. But the fourth pump, this steady uptrend, was mainly the lunar LFG, the Lunar Foundation Guard, I think that's what it's called. Basically, Do Kwon bought a ton of Bitcoin, causing the prices to go up. And then obviously I mentioned in our 2 episodes ago that he was forced to sell all of those Bitcoins at a low price. Yeah, so that was a bit of a fiasco. Yeah, so basically ranging markets are, you can identify a trading range. From here, it was 35k to 45k. That's $10,000, right? That's quite a wide range. And right now we're seeing a short range, narrow trading range being formed, and this trading range may turn into a much wider trading range. So we'll see. But I believe that within the next month, maybe in May or June, we'll just be trading between 25 and 34k. So it's going to be a $9,000 range, which is also relatively wide, similar kind of width as this, but I don't think it will be as long in terms of time. So all good, all good. How are we going to deal with this range trading? Well, it really depends on how often you can look at the markets. I mean, most of you, I presume, looking at this live stream, you'll have day jobs, right? You'll work during the day. Maybe you only have some spare time when you go for a coffee or for lunch to check crypto prices. Or you might be into crypto the whole time when you're working, but I wouldn't recommend that. You may get fired. And I mean, we're entering a bear market, so I don't think you should get fired. But definitely, if you are looking at the markets all the time, you could definitely trade this. So it's actually quite easy. Once you see some big move meaning from 48k down to 25k, and it bounces a bit, clearly we're now in a ranging market because it's bounced and it's formed this range. So basically after the first 2 bounces, we can identify this green box. So essentially what you do is you buy when the prices are near the bottom of the box, and you sell when the prices poke through the top or just at the top of the box. But this is quite a short range. Every move is basically 1 day. If we're looking at the daily chart, it's basically 1 day up, 1 day down. Yeah, that's exactly what it is. If you look at the daily chart, you can see 1 day there's an upward candlestick, and 1 day there's a downward candlestick, and then 1 day there's an upward candlestick, 1 day there's a downward, and then now there's an upward. Maybe this upward will continue up for a few days until it hits 32k, and then it goes down. This is a bit of a short range. I don't think many people will be able to trade this range very well, especially after going through such a strong trend downwards, because people can't really very easily adapt to changes. That's the nature of the human mind. That's the nature of human OS. What is human OS? We're all operating on human OS, right? We are people. We're basically domesticated apes. I'm not going to argue with creationists out there, but if you believe in Darwin, if you believe in evolution, you would know that we're basically domesticated apes, aren't we? We're bored apes. We're clever bored apes. We think we're clever. We think we're very clever. But the thing is, we're all like this. We all have the same code. So if we're all running on the same software, how can you compete? You have to compete by upgrading. You have to compete by upgrading to Human OS 2.0 instead of 1.0. Everyone's running on 1.0. Most people are running on 1.0 in the markets. You have to upgrade your brain to think in terms of Human OS 2.0. Okay, so how, sounds simple, Jimmy, but how do I upgrade my brain? Well, not by plugging a USB in your socket. Definitely not. Wouldn't recommend that. That would be unhealthy, guys. Don't do that. But you can definitely sit on the sidelines and just not have a position in the market. You should definitely try this sometimes. There are so many people in this market who overtrade the market so much. Overtrading is deadly. What is overtrading? You always want to have a long or short position in the markets. That's overtrading. You're super impulsive. You think you have to grab every single hourly or 4-hourly move in the markets, and you see the price pump and you FOMO, right? You see the price dump, you FOMO too, because you can short them. You could have shorted the markets, but you didn't. And if you didn't take that position and you didn't make that money, you would feel bad about yourself. You'd take it personally. And if you take that position and you lose money, you'll feel bad about yourself too. You'll take it personally. You'll take your losses personally. So don't overtrade the markets, guys. Always have time to sit on the sidelines and look at what the markets are doing. There's a great quote by Jesse Livermore. Let's go back to my Twitter. I think I posted it just a few days ago. Oh yeah, here it is. There is a time to go long, a time to go short, and a time to go fishing. Okay? Going fishing means you can do what you like. Just don't stare at the markets. That's exactly what he means. So this means to sit on the sidelines and just let the market pass by. Let the market do its thing until it's more suitable for a long or short position. Because this choppiness is definitely not super productive in terms of money making, because you have to stare at the markets for a long time. So for most people, for most of my viewers out there, let's have a look at how our live stream is doing. For most of my viewers out there, I would definitely suggest you guys sit out of this. Just take it easy, go for a 5K run, go for a swim in your local swimming pool, cool down, take a cold shower, wash that FOMO off, okay? Wash that FOMO off. If you feel the FOMO, I sometimes feel FOMO. I used to feel a lot of FOMO, especially when I sold a coin and it just goes to the moon. I've done that a lot. I did that a lot in 2017. I did that a lot, especially in 2018, 2019, which is deadly. Sorry, I need to do my nose. Sorry about that, guys. I did that a lot in 2018, 2019. How did I get... I did get wrecked in some cases. Because if you FOMO in a bear market, you're going to get wrecked. Do you know why? Because in a bear market, 90% of the coins, if you look at the top 100 coins, should we go to crypto bubbles? If you look at the monthly, all of these coins are red. And if you wanted to pick one coin that went up, that would be TRX. How would you pick out one coin out of 100 coins to buy? And let's have a look at the week. Let's have a look at the week. If you had any money on Luna, you would lose it all. Most other coins bounced, but I doubt anyone really bought the bottom. I did buy the bottom because I was on the sidelines. I was shorting the markets from 48k all the way down to 27k. All of you guys know this. I post it on my Twitter all the time. It's fully replicable. Yeah, so basically, if you're looking at the monthly, for most of the past 30 days, everything has been going down except for TRX. Why has it been going up? I don't know. Maybe Justin Sun, who was on Hobby Live live streaming a few days ago, maybe he was buying a ton of TRX. TRX is definitely an odd one. It doesn't really follow BTC. It doesn't follow BTC most of the time. It usually just goes on its own course. So that's quite an interesting thing to notice. But, you know, like all of these coins are going down. How are you going to choose the one that goes up? You can't. If you try, you'll get wrecked. So please don't even try. Don't even try. Just go with the trend because the trend is down. The trend was down. How about now? How about now? To be honest, I think we're at a local bottom. A local bottom is basically where the prices are likely to stay at a level where they're not going to go down anymore in the short term. So basically, I don't think we're going to see Bitcoin go below 25k within the next month. I believe 25k or 26k on some exchanges was the bottom for Bitcoin for the next month. So where do I think this range will be? I think it will be from 25k to 34k. So let me draw that range for you right now. It's basically this range here. 25k to 34. So I would draw this on all of your trading views, on your Huobi exchange, on your whatever exchange. You can draw this range, and it's a great price to buy if we see prices crash to the 26k mark. And if prices go to 34k, 33k, that's a great place to short. Obviously within this range, there's bound to be some smaller ranges. For example, one of my favorite trading strategies is to stop people out. So what I do, if I have a lot of coins, I used to do this a lot, but maybe not so much now because the crypto markets are a lot more liquid and my money can't really affect the markets. But back in 2018, I could actually affect some markets on some exchanges. So when prices went up to a level where people are more likely to place a stop loss, I would just slam in my buy order, and it would cause the price to go up, stop them out, and it would spike up. And I would capture that liquidity by stopping these people out, sniping their stop losses. So that's exactly where you should be shorting. So in my opinion, it's very possible that in the next day or two, we'll see Bitcoin go to 32K and then drop to 25 or 26K. So that's what I'm looking for. So I believe that in the next 2 or 3 days, we may see Bitcoin go from now, which is 29K, to 32K, and then drop really hard once it's tapped into that liquidity, drop really hard to 26 or 25K to liquidate the people who weren't liquidated on the day of the big dump. Because if you remember that day UST had a lot of shite going for it, and there was USDT. USDT had a bit of FUD, causing USDT to go down by 3%, which saved a lot of people, actually. It saved a lot of people's positions because it caused Bitcoin's price in USDT to go up temporarily, causing the spike low to not be as deep as other exchanges. So a lot of positions weren't liquidated that day. We're now looking at the Bitstamp US dollar chart, but if you look at any Huobi, Binance, FTX, USDT chart, the spike is definitely not as low as this. You guys can go check it out now. That's because USDT went down in value just as it dumped. Okay, so that was a bit of a tricky thing because most liquidity is in USDT. Right. So I believe we're going to tap into that liquidity and then go up. So we're going to see a short-term bounce to 32, and then a dump to 26. And then from 26, we're going to short-term bottom and then go to maybe 33, 34K, which will correlate with the 4-hour 200 moving average. And that may be the end of May, early June. So I believe this is what will happen. I would definitely look out for that. Some great trading opportunities here. But what should we do right now? I wouldn't recommend anyone do anything right now because we're still in this really narrow range and it's very difficult to trade. It's totally possible that we just dump straight down from here. But then I would be buying down here. That doesn't change anything. So essentially, I'm putting a short order up here, maybe with a stop loss. Let's just calculate that. With a stop loss of, let's say, because I'll be shorting maybe with 10% of my capital. So a stop loss of, let's say, 4% is totally fine. 4% of 10% of my capital is like 0.4% of my total net worth. And then my take profit would be basically at the 26K mark. Let's go down to maybe 26K mark. And that's a risk reward ratio of 4.7, and that's a great RR, okay? I definitely take that trade if it comes to me. And the other trade I'd be taking is a long or spot position, but I don't usually I wouldn't put any stop losses on this position. I just buy in at 25K ish and then just wait for it to go up. Even if it goes a bit lower, I don't mind. Okay, so I'm going to be selling at 32K, selling at 34K, buying at 26K, buying at 25K. Let's go, guys. That's going to be great. 能说中文吗? Not in this live stream. It's just in English. This live stream is just in English. I do Chinese live streams on my own YouTube. You should definitely give me a follow on my own YouTube. If you just search my Twitter handle, on YouTube, you'll find me. 老外必士, that's my Twitter handle. If you search that on YouTube, you definitely find me. Yeah, let's have a look. Yeah, for those of you who've not followed my Twitter, please follow my Twitter. We're at 14.2k. I'm hoping to get to 20k followers, hopefully by the end of this month. Yeah. And yeah, so I've told you guys my trading plan, and let's have a look at Ethereum. Ethereum is essentially the same thing, going for it. I drew this actually on the 8-hour chart. On the 8-hour chart, we can clearly see the short-term trend has been hindered. The short-term bounce has been hindered by the EMA 20 moving average. And that's caused a ABC correction. So this, in Elliott wave theory, is called a ABC correction. So that's essentially 3 waves up or 3 waves down. And within this 3 wave, there's a 3 wave, there's another 3 wave, and then there should be another 5 wave. So the next 5 waves should take us to 2,200. I think I'd be shorting at 2,200 and placing my stop loss above 2,320. Yeah. Don't snipe me, whales. That would be so nice of you. Yeah, so that's basically our trading plan for Ethereum. So just to recap, what should we do in a ranging market? First of all, go fishing. Go fishing. What does that mean? That basically means you can actually go fishing. You can go fishing in a river, at the sea, no problem. But I mean, like, do what you like doing. Do something chill. Well, I don't like fishing. I don't like fishing at all. I don't even own a fishing rod. But I love running. I love running with my Steppen app. I've just bought some rare joggers. You want to see? So I bought these rare joggers for 400 Solana, and they're earning me a lot of epic mystery boxes, so level 4 mystery boxes, and it's just such a fun game to play, you know. So yeah, I really like anything related to running. Anything related to running, sports. I like outdoors. I like fine wine, whiskey. I like cigars. So essentially, when the markets are going sideways, I like to enjoy the finer things in life. I don't want to look at the markets like all of these newbies do. Okay, so the people who lose money in the markets, the nerds in the markets, do you know what they do? They have their phone on. And they just look at the phone when they sleep, and it's terrible for their eyes. Their eyes are bloodshot. Look at my eyes. They're totally fine. I have no contacts, no glasses. My eyesight is perfect. Both my eyes are perfect. I tend to look at charts twice a day, once for about an hour in the morning, and then another time with you guys in the evening. So even as a professional technical analyst and trader, I don't check the charts all the time. Why should you? Unless you have a position that you're super uncomfortable with and you just have to check every hourly, every 5-minute, 10-minute, 15-minute candle gives you a heart attack. So that's not really healthy. If you're looking at the charts, sleeping, when you're sleeping. You have to check the charts every hour when you're sleeping. That's definitely not healthy. I wouldn't recommend that because, first of all, that hinders your brain from thinking clearly. If you don't get enough sleep, if you don't get 8 hours of sleep, your brain is going to work less efficiently than people who get 8 hours of sleep. So you don't have an intellectual or basically an intellectual edge. You don't have an intellectual edge to beat other traders in this market, because in bear markets are basically PvP markets. Okay, let me put that up there. You can definitely search this term up. PvP. What does PvP mean? PvP is player versus player. VS. Okay, someone vs someone else. So who versus who? This is essentially bears versus bulls, traders versus other traders. Okay, so you have to take money from other traders by their mistakes. If they make a mistake, you make the money from their mistake. So if you want to be better than someone else, obviously you're thinking. You have to think in Human OS 2.0. You have to be running Human OS 2.0, which means you need to reprogram your brain to think like a whale. That's one of my earlier episodes. You should definitely watch that. How do you think like a whale? You need to long the markets when people are afraid to long the markets, but obviously don't long the markets when there's a massive dump and when there's total chaos and panic. I mean, like, you can really feel there's a slow grind at a low spot and people think it's just gonna keep dumping, but everyone's super bearish. That's exactly when you should long the markets. Not financial advice, by the way. You guys should do your own research. But basically in a PvP market, you have to be on the side with less traders, because usually less traders hold more money. That's just the state of the markets. More traders like to flock to one side, especially after a big dump like this. Everyone's super bearish now. It's so bizarre, isn't it? Because everyone was super bullish at 48k, if you remember, right? If you looked at Twitter, everyone thought, wow, we're gonna go to 50k. This is gonna be great. Everything's super awesome. But we dumped super hard, and people were bearish. No, people were bullish after every single little bounce. If you remember, right? We had many Hobby Live episodes at this top, at this top, at this top. These tops seem to correlate with our live streams. But I think that's just a bit of BS. It's nothing to do with us. It's just a coincidence. But anyway, you remember that back then, after every dump, there was a little bounce. And well, once the market bounced a few $100s, actually not even a few $100s, $100 or $200 on Ethereum was enough to make everyone bullish again. There's a small bounce, everyone's, yeah, let's go up, boom, 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 you know? But then the markets dump again. Everyone's like, ooh, maybe we need to wait for another bounce. And then it bounces again. Everyone's super bullish. We're gonna go to the moon, go to 4K, boom, boom, boom. But no, it went down again. It went down again. And this bounce, if you remember, it was the Fed talk. Jerome Powell announced the rate hike of 50 basis points. And then the markets went to the moon again, to the moon, right? And then we dumped really hard from then, and then the super deep dive came, and that was really fast. That was easy for bears to hold on to, but not many people could hold on to their short from 48k, or for us it was 33, no, sorry, 30, 3,350. That was our short position for Ethereum. I held on to that the whole time down. I didn't close it at all. I actually added to my positions on the way down after every bounce. And we closed our short at 1800. So let me show you what I did. I essentially shorted the top at 33.50 and oh sorry, not this one, the short position. Shorted the top at 33.50. My stop loss was at 3600, and my take profit was all the way down here, basically at the very bottom. So that's a hell of a short position. Okay, guys, how do you hold on to this? You have to grab onto the narrative. Everyone's super bullish when things go up. That's why we talked about all of our psychological analysis on the way down, and everything was shits and giggles from there. And yeah, I'm really happy about that short position. Made some fat stacks on that. Definitely. So what about now? What's my next move? My next bigger move would be to load up again at 1700, 1600, 1590. So these three circles here are my buy levels. My sell level for the short term would be 2200, 2200. So if it doesn't get to 2200, that would be a bit of a shame, but it doesn't really matter because I've already bought at the bottom and I'm ready to load up more of my position. And it's not a long position because I don't really take long positions. I just buy spot Ethereum. So I'm going to buy a lot of Ethereum in the 1580 to 1720 range. And then I'm planning on selling. So let's project what will happen, possibly end of May, early June. I'm projecting a speedy recovery, and then Ethereum should go to a high point of 2,300. We may need to check the linear chart. 2,400. I think 2,400 is a good top for June. And then from June onwards, it's basically down. Into July. July 25th, we may get to a low point of 1,400. And I think that would be a great time to load up all in Ethereum. Maybe not all in Ethereum, but I would definitely go for a third of my position in Ethereum because, as we know, there is the merge narrative. It's only a narrative right now. I think that narrative will kind of have a snowball effect once prices start going up. Remember, guys, narrative follows price. What does that mean? That means once people see the price goes up, they generate a narrative to support themselves, their own mind of seeing the price going up. So basically they see the price rise and then they're thinking, why is the price rising? Well, oh yeah, because the Ethereum merge may take place in right? So that's finding a reason for price change in the markets. So, but actually, most crypto markets are technically driven. Ethereum is the same. That is why we're using technical analysis, and we're being so good at it, because these markets aren't fundamentally driven. They're technically driven. These coins, many of them have no fundamentals. They're just coins that are assets that are traded on the markets, and whales are dumping or buying them merely because this way more people will get liquidated. That way more people will sell. So these are technically driven assets. So we must analyze these assets using psychoanalysis. We need to analyze what the markets, what the participants in the markets are thinking, and use technical analysis, meaning looking at charts, to support our bias, right? We're all biased. I'm a human, I'm biased. What is a bias? It means like a human interpretation of something. It's not 100% true, but we have our own interpretations of things, right? So my interpretation is that in August, starting in August, markets are going to go up. We're going to go up. We're going to make a bunch of money. Other people will attach a narrative to that. I don't attach a narrative to that. I believe narratives follow price. And I believe within the next 2 months, our trading strategy should be to buy low and sell high. Okay, so that doesn't mean you see the prices dip and you just buy. That doesn't mean that. We need to identify a clear trading range. So this is really clear, actually. This is really clear. In Ethereum, we've identified this range. It's slightly sloping downwards. So I think within this month or early next month, we'll have a time to buy in at 1,700. Once we get to that price, you'll see that most of Twitter is going to be super bearish. They're going to say, we're going to drop to $1,000. We're going to drop beyond $1,000. Everyone's going to die. Maybe not that, but you know. Yeah, Ethereum is gonna go to hell. But guys, please act rationally, because when prices are going down, people are pissed. People think the prices will continue going down, but they do eventually bounce. The markets don't care about your positions. The markets don't care about your feelings. Okay. So I believe once we get to the 1,700 range, if we see people on Twitter, people on YouTube, people in your group, or even in my group, I have 2,000 members in my group. That's essentially a laboratory for psychoanalysis. That's what I do all the time. I just sit on the sidelines. I don't talk in the group. I just look. If everyone's super bearish, maybe that's the time to buy in. Yeah. So basically, I think if everyone's super bearish at 1,700, I'd definitely be buying. I'll place my buy orders there anyway. And then once we buy that, I'm gonna plan to sell at 2,350. I'm not gonna sell at 2,400 because I may not even get the chance to, because the whales will front run me, right? They'll try to sell earlier than me. So I'd be selling at 2,350, maybe take a short position at that point too, and then place my stop loss order above 2,500. That would be super safe. So my next big short would be from this point with a stop loss of 5% all the way down to 1,400. And I think that would be a huge win for us. A similar kind of a drop from the last drop. Last drop, we experienced a 46% drop. Next, we're going to see the prices drop from 2,300 to 1,400, basically. So 40% drop with a 5% stop loss, a risk-reward ratio of 8. That's totally awesome, guys. I'm going to take that short position no matter what. It's not going to be a big short position, although I just said big, but I think 30% of my total capital would be suffice. Okay. And once we get to 1,400, I believe we should load up on spot Ethereum, place a stop loss at, let's say, 1,200. Obviously, you only place the stop loss if the markets have bounced. If the markets continue downwards, you just buy more. You just buy more. Don't fill all your bids in at the same place. Once the markets drop further, you can buy more. So you should start with maybe a third of your capital. And once you see the markets rebound a bit, then you can add in another third. And once you see markets push through some major trend line, like at 2000, you can add in the third portion. And then if you want to do a stop loss, your stop loss should be below 1,150. So that's how I'm going to trade Ethereum in the next few months. So basically, we talked about going fishing when markets are ranging. If you're not comfortable with trading, just don't trade. You don't have to trade. Okay, it is not your full-time job to make a trade every day. Nobody's forcing you with a gun saying, if you don't make a trade, I'll shoot your brains out. Nobody is doing that. It is you in your mind forcing yourself to do stupid things. Because if you are FOMOing all the time, you tend to take bad opportunities. Not all opportunities are worth taking. Some opportunities are super risky. You shouldn't even take those. You should sharpen your axe for, if you have 10 hours cutting down a tree, you should spend 9 hours sharpening your axe and 1 hour cutting down the tree. So that's exactly what you should do in the markets. You should wait for the perfect opportunity and then swing that bat, get that home run in, and yeah, happy days, happy days. Let's have a look at some other coins here. What should we look at? I mean, there are some really hot coins doing terribly. ApeCoin, we could see a bounce to 10 and then a drop. Some other coins, UST is complete shite. Let's not even look at that. So many people have lost their life savings in UST. And I can't believe people are still buying into the Luna FOMO, right? They believe it's dropped like 1,000,000% and it has some chance of rising back. There's no chance of rising back. Filecoin, I think Filecoin is gonna see a big push up in price this year. I believe below $9 is all a good buy. It's possible to see $50 by the end of this year. Not financial advice, of course, guys. I'm very bullish. I'm not super bullish Solana, but I believe Solana could be seeing a nice range forming, possibly a short-term squeeze to $61, drop back to 40, go back up to 70, 17 down to 30. I think 13's gonna be, no, so not 13, 30. Okay, 30. 30 is gonna be the bottom, and then we'll see prices go up maybe to 150. That would be super, super nice. Okay, so from 150, I think we'll drop back to single digits, which is going to be the deep bear market. So let's just recap our long-term view on Bitcoin. Long-term view on Bitcoin, let's have a look at the weekly chart here. That's basically, we've done this weekly chart last time with the multipliers, right? 18x from the previous top, 3.4x from the previous top. The next top will possibly be 2.25x from the 69k top. Nice. Okay. Where will be the bottom of this bear market? I believe 9k. Some people believe we'll never drop below 20k. I disagree. I believe this bear market will actually use the weekly 200 moving average as the top of our range in 2023 and possibly 2024. So it's possible that we'll drop below 20k, go to 9k, and then form a top at 23k. So that would be super, super bearish for the industry. And I would say 95% of current projects will just rug pull and just run off with cash. And only the true builders, the true believers in this space will stay. So risky times ahead. I would definitely save up some income to buy the dip in 2023. And that's all for today. Thank you guys, as always, and we'll see you next Tuesday. Yes, hope for the best, all of the best. Hope you trade the markets super well. Hope you all make money. Let's go. Okay, everyone's happy.